Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Well, let's continue to talk about euro currency. Start as usual from the daily time frame. As you remember, yesterday we have discussed this pattern that has formed on the market. It's really perfect bearish engulfing pattern, and we suggest that, precisely speaking, we have suggested that probably market could show some retracement to the downside, and the potential target of this retracement will be this confluence support. Sharply speaking, the more probable target of this potential retracement is this confluence support on the daily time frame, 135.75, 136.14 area. It's right here. Although you can see that market yesterday has penetrated this low of that pattern, it hasn't closed below this point, below the low of this black candle. It tells us that currently this pattern has not been triggered yet. So we could say that this pattern has started to work only when the market show close below the low of this pattern. Now you can see that this is not the case. So yes, the market has penetrated that low, but then returns right back and close above that. Now you can see the deeper retracement. Since this is the first retracement after the significant thrust on the upside, yesterday we said that probably market could show the 618 retracement rather than 38 retracement, because when the market turns, it usually shows deeper retracement than just underway of some development or some thrust. Okay, so on the daily time frame, it's really nothing really new. So we can see that just same bearish engulfing. That area is the area of this failure point of that pattern is 139.05. If market will close below it, then we could say that this pattern has been failed, and probably market will accelerate further to the target that we have appointed in our weekly research. So you could read it on our forum, ForexPeaceArmy.com forum. So you can see you can read the weekly analysis where we have appointed the potential target on the daily time frame of the upward move during the week. Well, but currently we can see that market just continued this retracement inside that pattern. Okay, this is almost, you can say, almost inside trading sessions, so some kind of consolidation. And I think that's currently today we stand at break even, at crucial point for that development. And just a bit later you will understand why. Let's take a look at the 4-hour time frame. So that is potential head and shoulders pattern that we have discussed. Just to remind you, this was the trigger point of the 3-drive pattern. That was the 618 extension of this butterfly. Okay, that was the part of this 3-drive, so that initial move to the downside. The 127 extension from the whole butterfly move from that low to that high stands precisely in an area of daily confluence support. 127 extension stands a bit higher, while 1618 stands a bit lower, but it's very tight to this daily confluence support. The target of the 3-drive pattern, as we said, at minimum, the low between second and third drive. It's right here, because this is the third drive, second drive. So market could continue a bit lower. Okay. Now, also we said that probably market is forming head and shoulders pattern. And now you can see that is really the case. But currently, we stand precisely at the 618 retracement resistance of this swing. Okay, and that is very typical ratio for the head and shoulders. Also, you can see that if we suggest that this is the left shoulder, the top of this shoulder is right at that area. So market could continue a bit higher, maybe to the 138.20 area, but it should not continue. It's too high, too deep, since this will be the sign that probably it could fail. The higher market will continue to move to the upside, the more probability that this pattern could fail, and total bearish engulfing pattern could fail on the daily time frame. So be careful with that. Okay, if you would like to take this pattern and enter short from that area, we need to take a look at the hourly time frame. On the hourly time frame, we see that swing to the upside. This is that swing on the 4-hour time frame. Okay. What we see? A, B, C bottom, 618 extension stands precisely at the same area. This is agreement. Area of agreement. The 100% extension stands right here, 138.17. So if you would like to take that signal and try to enter on the short side of the market, you could do this. But place initial stop somewhere above the 100% extension of that swing. Although this swing is too extended and non-typical for the head and shoulders pattern, this could save you from the occasional triggering of the stop loss. If market will show some respect to that area and show some move to the downside, you will be able to place the stop to the break-even. Because if you'll take a look at that pattern, you could see that probably this could shift to the butterfly sell pattern. So this, for instance, could be the left wing of the butterfly. Market could show some respect to that area and probably will retrace to the weekly pivot point 137.09, somewhere in that area, and then could continue move to the upside. So if you will take a look at this, if you will take this signal, the potential head and shoulders, and enter short, okay, if market will show the respect, you could place your stop to the break even and just watch the movie. So if this is really head and shoulders, market should not show any retracement till the neckline or even till the reaching of that area. Okay, I strongly advise you to take profit somewhere in that confluence support, since this could be the head and shoulders failure pattern to Napoli directional signal, since the confluence support stands below neckline and the 100% extension target from that A, B, C top stands very close to that area. So this is some kind of also agreement. So take the profit somewhere inside this. Okay, but if market will show some retracement with respect to that area and then returns right back and move above it, then probably this pattern could shift to the butterfly sell or something, or this could be just the continuation of the move to the upside. So be careful with that. So that's two different scenarios that could happen and how you could deal with them. So again, this is some kind of agreement with the 618 resistance. You can try to enter short, okay, if you would like to take the signal at all. Well, if market will show some respect, move your stop to the break even, okay, because this could be this pattern could shift to the butterfly sell. This very often happens, especially on the intraday charts and the 4-hour time frame. This intraday chart. So when the head and shoulders patterns shift to the butterflies, when the market breaks the top of the right shoulder, it's very typical. This could happen really. So that's why I'm warning you just about this possibility. So that's how we could deal with this potential reversal pattern. If markets will form a really head and shoulders pattern, I suppose that it should reach at least this confluence support, and I think that this is our profit target objective.